day at the chart, a sea of red, talking puts and calls, but they just stare ahead. Strike price means nothing in the black minds. Margins
This
and
is
leverage like
the same
mountains to climb.
stuff we do every time.
But it is
All
next
right.
to my foot. Okay.
Yeah. You're up today. You were up like $2,000 the other day. You're up another grand today. So we're working back towards being profitable, which is the whole point of doing this. All right, so welcome back to Noobs. This is Wednesday. What is it? The November 26th. We have the market closed tomorrow, and then a half day on Friday. So if we do a Noobs on Friday, it'll have to be earlier in the day. Market's up across the board. We've got the Nasdaq up 260. We've got the S&Ps up 60 points. The Russell's up about 20, and the Dow is up 425 points. We've got gold up, silver up big, gold up small, silver up big. Crypto up relatively small, 1,400, and then or when I say crypto, Bitcoin up 1,400, and the Ethereum futures up 50. Soft commodities up on the day. We've got natural gas up and oil up small. So all of your positions today are green. Every single last position is winning. So cue the music. All I do is win, 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 no matter what, unless you're losing. We've got PALL. Why don't you go through these positions again here today and see if there's anything that you want to adjust. Talk about your positions. That ACHR, you're getting to the point in ACHR that you don't have enough premium in that to make it even monetarily worth having those calls. I don't know what you can get if you roll out to December in there, but maybe it's probably about time to do that because they're only 15 cents. What can you get in December or January? Sorry. 9 gives you 30. Yeah, that'll give you another 20 some cents. 24 cents. It's better than nothing, man. I would go ahead and do that. Was hoping to get a little bit bigger of a bounce, but bada bing, bada boom. You only did one. Do another one. Just go to your orders. No, go to orders. Filled orders. Click on that one. Similar order. Send it. There you go. AG. This one, how much intrinsic or extrinsic value do you have left in those calls? Hello?
$2.45. Is it the $2.45?
Yeah, the calls are $2.45, but how much of that is extrinsic value? You see, the calls are in the money. Stock's trading at $13.25, and they're the 11 call. So that means it's in the money by
$2.
how much? $2.25. So that means how much of that $2.45 is made up of intrinsic value
20 cents.
and how much is extrinsic value? 20 cents is extrinsic value. The rest is intrinsic value, meaning you can only make 20 cents out of those contracts more all the way out to December. So you either should close this and take your little profit, or you should look at maybe potentially rolling it. Because it's not worth keeping this on and risking $1,100 per contract to make 20 cents.
There's 2 of them, right? Yeah.
Go. Oh man, Want to go all the way out to April? That's too far. So 11 would give you an extra. What is that? Do one. No. Do one of the 11 and then do one of the 12 and see if you can do that for a credit. 11 cents. I like that better. It's going to be a debit of 11 cents, but it's going to give you the ability to make an extra $100 out of here as opposed to.
Hold on. Dumb. It's just like.
What are we doing? What's going on?
Okay.
So you can do that, or you can just roll them straight out, or you can just close it and take that risk off and use the risk somewhere else. Honestly, okay, that works. Okay. Now, Angel Studios. This actually rallied today. It was down pretty good on the day when it opened, and it's getting a nice little bounce. So I don't think you don't touch nothing in there. Anything in there?
Applied.
Applied. This one also is moving in the correct direction. What are you doing?
The dog. Right behind me. Getting into stuff. Alright, applied.
Yeah. This one's just winning. I mean, I still think you're good in there. I don't think you touch it. You just keep letting that premium come out of those contracts, and hopefully we get a little bit of a continuation of an up move in there. A slow, steady up move would be more ideal than a big up move. Weeble is working for you today. You see, this is up pretty decent today. I think Weeble is going to go on quite the run here in the foreseeable future. In fact, go into Weeble and put on some long contracts in here. Go to the option chain. Go out to March or May. March. Do the 750 call, buy the 750 call, and sell the 1250 call. What is that going to cost you? $2, $1.74. See if you can put that on. Put on like two of them. $350 puts your break even at the current stock price or below the current stock price. So basically, this is going to pay you if the stock price continues to go higher. Because did you see what your break even point in there was for doing that? Because you sold premium against long premium, your break even point is actually lower than the current stock price. So instead of risking $800 or $900 buying the stock, you got 114 days of exposure, and you only put up 170 some dollars in risk for that 114 days of exposure. Those contracts are, how wide are those spreads that you just put on? Go back to Weeble and look at the spreads. What's the width of the spread?
5.
What?
Yeah, maybe 5.
I couldn't. Yeah, it's $5 widespread. So what's the most that it can be worth? Your dog is up on the.
Dude! What are you doing? You got a weird build, buddy. You're a weird looking dog.
So what's the most it can be worth on expiration?
5. That's a spread.
$5.
Is that
Yeah.
the most can be worth?
So $500 per spread. It's the most it can be worth. So you paid $175 for it or something like that, and the most it can be worth is 500. But there's no. So go to extrinsic value.
Is that one of these things? Yeah.
Look at the extrinsic value. So you're long 86 extrinsic value, or I'm sorry, you're long 82 extrinsic value, and you're short 86 extrinsic value. So you have no extrinsic value, meaning you're paying nothing for the time that you got access to that risk.
Okay.
If you had extrinsic value, that extrinsic value would decay over time. But because you sold more extrinsic value than you bought, you're basically getting that exposure without any theta decay. All right. Google not working today. Scroll back over. Well, I guess it is technically working, just not super well. We need Google down like $10 here, honestly, in the next couple days, ideally. We need this thing down under 310 in order to potentially get out of some of these positions. It's really super overextended. Another one that's really super extended is going to be Eli Lilly. But I don't think we have enough capital to put on a bearish trade in there. MP, this is working well for you today. It's up, what is that, up like $2 or something? I don't know that there's really much in here for you to do. MU, another one. Oh, I bought some shares in MU because this thing started rallying again. So I don't know if you want to keep those shares or take that little bit of profit and move on. But I also rolled out to January. We were in December. I rolled out and got your strikes further away from the money. So now you've got all the way up to the 280 strike. So looks like you're still down overall in there. So I don't know. This market's been insanely strong. Nvidia is also up on the day. You're down still a total of 500 and some in here. I did roll your calls down in Nvidia, and I actually took your puts. Remember, your puts were out in like February, so I brought your puts back to the same expiration, and in order to keep a credit for doing that, because I shortened the amount of time, I had to move them closer to the stock price. So I think you were at the 160 put in there. Now you're at the 175.
Okay.
So you have more premium that's going to expire sooner in the 175 put than you otherwise did. But for now, I don't think you really adjust that much either. You've got Oracle working pretty good for you here today. This one I did roll out because we needed to free up capital. Hello?
I was about to sneeze.
Oh. So I rolled this one out yesterday at probably the worst possible time to roll this out because now you're all the way out in June, which is like 200 days from now. But you're down at the 185 put. So
1 second.
it's working today.
What are you doing? Knock it off. Stop.
Was he eating your remote?
No, he's eating toilet paper and he likes to rip it up everywhere. Like
Huh.
all over the floor.
Like a dog. So I would be more concerned about Oracle and try and get this put back closer to a near dated expiration if you had number one, more capital, and number two, if you didn't have this calendar spread from April into February. But the calendar spread you can see is helping supplement the slow movement of this put that is all the way out in June. So that's not gonna increase in or it's not gonna decrease in value very quickly because of how much time is on that contract. But that calendar spread is going to help supplement if in the case that you do get an up move. So I say you just leave that for now. PAL, all right. So this guy is getting some momentum behind it here. So I think we take and we roll your calls out here and try and get some more ability to be profitable if this thing rallies. So I don't know where we're going to be able to roll it. So we buy these back. They're trading about 7 something. What if you go all the way to March? Look at March. There's only 114 days in March. Where can you go to in here? 135. Take it. 130, 135. That'll give you 70-cent credit. Yeah, that's fine. That gives you enough room for this thing to rally another $10 and maybe squeeze another $1,000 out of this. And in March, I think 135 is. We'll probably wish we rolled it up even higher than that. We keep getting these type of moves. Tesla is behaving today. I did roll your Tesla down away from the money because you had a really big up day in Tesla yesterday. So I took that opportunity to take a little bit of risk off. Another solid day in Tesla here today. I think I also rolled out this call, was going to expire at the end of this week, but there was basically no value left in it. So I rolled it out to the end of next week and moved it up to the 270. It was, or the 470. It was the 445, remember?
Mm-hmm.
The only thing that I would be looking to do here in Tesla is if we continue to get up moves, I would be rolling the puts up, but I don't think you need to do that today. You still have $850 in premium. This is one that I just sold today into this S&P up move when it was up a little bit higher than here, so it's starting to work already. It's just basically fading this rally a little bit, getting yourself some short delta because all of your positions are pretty much leaning long. So I wanted to get some short delta on there, and it has started to work, but it's not worked enough that you can take it off. So I would go ahead and just put in a closing order that's a good till cancel in there. Say close position, and then say close position, and then I would put it in for like 40. That'll give you $100 out of that. You can just type it 40, and then change day from day till good till cancel, and then send that. And that will automatically close that night or day if we get a down move, a decent enough down move. And then the only other thing that I would be adjusting in this Russell, I don't think I would do it today. But eventually, what's your expert? How many days till expiration? And
65 and
114.
114.
So eventually, we want to get that 114 back to the 65. And I don't know if you have enough capital to do that today, because I think that's going to require more capital. So I think we just leave that for now. It's actually giving you some short delta, which given the fact that everything else is so long delta, I think that short delta is probably not a bad idea at these levels right here. So I think that's pretty much it. The only other thing I would look at maybe doing is a Eli Lilly trade. What did Josh just go to LLY? So go to the January expiration, and then do something like scroll on your put side down to like see the 1,020, 1,000. 1,020 on the put side. No. That's 12,000 or 1,200. 1,020 on the put side. And then the 1,000, buy that or sell that one. The 1,000. How much is that? So it's $20 wide long spread, $400. Oh dear. We don't want that. No, that's too much. Go $20 more out of the money and do the 1,000, 1,000 or 990. That is, how much is that? That's a $10 wide for $1.75. Yeah, go ahead and put that on. There you go. That'll give you a little bit. This stock is like super extended. If you look at the actual chart, it's done nothing but go up, and it's super overbought here. If we get a little bit of a pullback in here, you might be able to close this out for a profit of like $50, $100 or so. Ugh. And I think you are good to go. So where are you at now? How much are you up on the day? Scroll over to left. 1,300 on the day. You still have another what to make back. You still have about $3,000 to go where you're back in the green and can take some profits. But you're well on your way, much better than you were. You've made back like three and a half grand already in just a matter of like 2 or 3 days. So this bounce has been good for you. And you've also gotten to adjust some risk out further in time and take in more credits. So you're not in a bad situation.
Okay.
I think that's all I got. Don't forget to like and subscribe, everybody. Thanks for joining. Are there any questions in the chat? I don't know that we have anybody else in here with us. I think it's just you and Josh and I. Oh, I stopped looking at this.
It's just us.
Okay. All right, that's all I got. Don't forget to like, subscribe, coming out with us in the Discord, and thanks for watching.
Another day at the chart, a sea of red, talking puts and calls, but they just stare ahead. Strike price means nothing in the black minds, margins and leverage like mountains to climb. Spent the whole week on Delta and Greeks. Gamma theory ain't cutting through their peaks. Volatility shakes, but they don't feel the quake. Future contracts blur on the financial break. Can't you see the candles rise and fall? Risk and reward, it's a game of all or no. Options open, futures closed, eyes blind. Frustrated fathers dream in the stock grind. These waiting specs, faces blank as empty streets. Hedging positions, but the questions repeat. Time decay means nothing to the young souls. In this market play, it's like digging holes. Iron condor flies, but it never lands. They can't grasp the feel of these trade winds. Liquidity try choking on the sand. Profits and losses, they'd rather go play bands. Can't you see the candles rise and fall? Risk and reward, it's a game of all or no. Options open, futures closed, eyes blind. Frustrated fathers dream in the stock grind. Feeling what? It's a game of all or no. Options open, futures closed, eyes blind. Frustrated fathers dream in the stock grind. In the stock grind. Ow! In the stock grind.